Well, happy Wednesday, everybody. Dan Edwards here at the Seattle Real Estate Podcast with my good friend Tucker Maxwell of Guild Mortgage. Welcome to the show, Tucker. Welcome to the podcast, everybody. Hope everybody's doing well.
Thank you.
We've got a great show for you today. Tucker and I were kind of talking about what's happening in the market, and we are now in the third month of the first quarter. We've had two pretty strong months. And we're going to talk a little bit about some sellers and kind of what sellers need to know. We're also going to kind of talk about the current state of the market, but of inflation and the feds and all that kind of stuff. But just kind of overall, what have you seen the first 2 months of 2024, Tucker?
Yeah, so the biggest thing is we've seen purchase applications increase. So year over year, we're well ahead of last year. So even though interest rates are holding strong, whether that's a good thing or a bad thing, I think buyers are getting off the fence and applying for home loans.
Yeah, I would agree. This year feels different than last year. Interesting thing is interest rates were lower this time last year, weren't they?
They were. Yep.
Yeah, but we are seeing that pent up demand coming around from the last half of last year, because from say July on to maybe October, we were kind of regressed because interest rates had creeped up to 8%. Now we have people that are in that buying season that are going to be making a move, and that move is kind of now. I guess also too, in the last, maybe since our last podcast, there's been a lot of snow in the mountains. Have you had an opportunity to go and enjoy some skiing?
I haven't, and I'm kicking myself. Just been too busy. And Sounders starting and Seattle Rugby starting. It's been a lot, but yeah, finally the snow gods have blessed us.
I totally forgot about the Sounders. Have you been to a match yet?
I did. I went Saturday. We had a 0-0, or for non-soccer people, 0-0 tied this past weekend.
I never understand
a lackluster game, but
why they allow tying. But basically, by tying in a home match, they lost, right?
Yeah, you're expected to win those
because essentially you get less points.
Correct. You get 1 point for a tie.
1 point for a tie. All right. Anyways, I haven't yet checked out the rugby, but I do believe they beat the San Diego team pretty handily, and I hear they got some good players there. I'm going to have to go check that out. I wonder if
I'd love to go to a match with you.
Okay, well, let's talk about it. If you haven't watched rugby, also there's the Six Nations going on, and I think it's on Peacock or Peacock Plus. You can watch Ireland, and you can watch England, Ireland, Scotland. Scotland beat England last weekend.
Oh, wow.
That was a big deal, and it was in Edinburgh. And I told my daughter she should go, but she didn't listen to me, and she didn't go. That would have been like such a great place to be with Scotland beating England in Edinburgh. That would have been a good night. Anyways,
and is New Zealand part of the Seven Nations? Or
no. It's Six Nations because Russia's out. Yeah, because of the Ukraine thing. So Six Nations, and it's the Northern Europe, Northwestern Europe. Anyways, so yeah. All right.
Got it.
All right, let's talk real estate. So let's do our Real Talk segment. Here's our intro. All right, with all this talk of the market heating up, one of the things that we're finding is sellers needing to have great real estate agents. And today's topic is what sellers need. So the National Association of Realtors, one of the things that they provide us real estate agents is insight into what sellers are looking for. And last week I was in Las Vegas at Keller Williams annual, it's called Family Reunion, where Gary Keller presented to us kind of the state of the market. And one of the slides I pulled from that state of the market is this slide right here, which is what sellers want from their agent. So as you look over this list, I'm just going to kind of go over the top ones, but the top ones is the most important thing that a seller is looking for is an agent who can help them competitively price the house. Now, when you think of competitively pricing, Tucker, what do you think? I mean, I know you're in the lending side, but what do you think when somebody says, I need help competitively pricing my house?
I would change that to accurately. And I think that's really where it comes down to a professional today, is we have a lot of pricing challenges given what the price traded for when rates were 3% versus what they're going to trade for today at 7% interest.
Yeah. And the reason why I think they put competitively is accuracy is always in the mind of the buyer, right? So whenever I do a pricing, I'm going to hide this little bubble here. Boop. whenever I do a little pricing structure with my clients, I kind of am showing them how it's a competition against other people, that it's not necessarily a science. And when you say accurately, I think it comes down to, in order to entice the highest amount of buyers in the shortest amount of time for the most momentum, right?
Yep.
A lot of sellers may want the highest possible price out of the house. As a matter of fact, I don't know any seller that doesn't. But the whole idea is to make sure that you're being cautiously optimistic in your pricing strategy, so that you are just dealing with one. Because oftentimes, if you're only dealing with one party on the other side, you're going to negotiate down. If you have multiple buyers that are interested, that price can be negotiated up. It's just a matter of helping them set it in a space that will make it competitive against the competition. All right, the number two most important item that sellers want from their agent is somebody that can help them market the home to potential buyers, right? So our whole marketing strategy is really based on creating the biggest possible funnel. With Keller Williams' footprint nationwide, we're exposing homes to a nationwide MLS. Also, Place, we're a Place team, and Place has a large network across the United States. And then Keller Williams has 8 offices in the Ben Kinney network. Plus, we're also going to be putting it in the MLS, which exposes it to all the other brokerages across the area. That's just a tiny bit, but it's important, right? A seller wants to know that you're actually getting their home in front of potential buyers. And the number 3 thing is helping to sell it within a specific time frame. I think that's an important thing, right? So it's not just about finding buyers, but it's also about finding buyers so that the time frame can work. And I will say this: if your pricing strategy, or if your timing is whenever it sells, you may have a more aggressive price strategy. If it's, look, we have got to be here at this time by that time, then it's going to be a little bit more aggressive. And I can say both ways can work, but I think the best way to work is within the specific needs of the specific seller. Like, I've got some clients that they want to sell. They're not in a hurry, but they're going to then turn around and purchase something with that cash. So that means what they want to do is sell and then get a couple of months as a rent back, so that they can actually go shop for their house and pay cash and be competitive in the purchase process. So there's a few more items, as you can see, but those 3 items represent the top 60% of what a seller is looking for. And if you're out there and you're thinking about selling your house, reach out to us. We can help you. And I don't really have a name or a number on here, but anything else you want to add there about what you see on this list?
I think the negotiation one is interesting, because I think that's huge today, but also something that's not listed here is just protect you against potential liability.
Yeah, I think that is actually important. One thing to put is, this is a seller survey, so it's in their mind. Like from a real estate agent standpoint, right? We know that that's an important part. I think the part that I love that's like on here that makes me laugh is help create and post videos for tour.
Yeah.
I mean, with all the video tours that I see of real estate agents with them, TikToking and doing all that stuff, the sellers just want you to sell the house for a competitive price, market to the most amount of buyers, and within a specific time frame. That's how you're an effective agent. So that concludes our Real Talk segment. So let's pull this guy out. We are going to jump over to the mortgage moment, but we are going to take a short commercial break. So we're going to come back right after this short commercial break. Right there.
72 Sold, a better way to sell your home. Who are we? We're an international company that does billions in sales and was recently recognized as the leading home selling program in America. Our program has been featured on ABC, NBC, CBS News, and in Forbes. And we're the only real estate organization in America chosen to partner with the National Football League and Major League Baseball teams.
On TV, advertisement, billboards, it's everywhere. You can't miss it.
What do? We offer you an alternative to the traditional home sale process. You want convenience.
It was all very simple.
I would say it was awesome.
My head is spinning. It was so easy.
Oh, convenient. I can't think of a better word. Yeah, absolutely.
You want a higher price, the confidence that you walked away with thousands more than if you sold your home the traditional way.
$20,000 over.
$35,000 more than we ever dreamed possible.
As they say, it ended up being thousands more.
A 2.5-year independent study of over 200,000 home sales in our largest market showed that sellers who used our program had an average median sales price 12% above the local MLS. 12% more for you.
Why wouldn't you do this? Why doesn't everybody do this? Traditional real estate transactions, why? Why do we have them?
That's our goal. That's our mission. That's what we do.
Pretty timely ad for speaking of what sellers want. All right, cool. So let's get into 72 sold. Yeah, we utilize that program for helping people get their home sold for the most. So, all right, so we're with our good friend Tucker. Here's how you get a hold of him. His number's here. We've got a couple of topics we want to cover. Let's first off talk about the Fed chairman and the talk he had today.
Yep. So Jerome Powell, the Fed chairman, gave a speech today, just kind of similar to the Keller Williams. He gave kind of a State of the Union and what to expect. And the good news was he didn't say anything unexpected, which is what typically creates a frenzy or creates markets to panic or whatnot. But he basically said, hey, we're not quite out of the dark yet on inflation, that the economy hasn't slowed as much as they anticipated, given the rate increases over the last 12 to 14 months, and that we're going to hold higher for longer, was basically the premise of the talk.
Yeah. And a lot of the impact of the higher than expected interest, inflation, already happened a couple of weeks ago. That's why what he said was not news to anybody. So it really didn't affect the markets too much. Okay. So then also we've got appreciation going on. Let's talk about this.
Yeah, so this really speaks to buyers on the fence, waiting for rates to come down. And so what's really important is we just got data on all these major players in the industry, Fannie Mae, Freddie Mac, the Mortgage Bankers Association, the National Association of Realtors, a variety of entities put out their predictions for appreciation. And to start the year, a lot of them were saying, oh, maybe 1% to 2% appreciation. It may even come down a little bit. They have all redone their calculations, and now they're anticipating at least a 5% appreciation this year, with rates at 7% or above. So back to that buyer on the fence waiting for rates to come down, we're still seeing price increases with rates holding firm. When rates do come down, we're going to see appreciation skyrocket again.
Yeah. So thinking about that from a standpoint of that appreciation, really the reason why appreciation is going to continue to stay at 4 to 5% in the foreseeable future has nothing to do with interest rates and everything to do with supply, right?
Exactly.
So you're not going to see a major change just because supply goes up. If anything, that will bring more buyers into the market. So the savings okay, let's take 5% appreciation on a $700,000 house. Let's see, 7 times 5, $35,000.
Got it. Nailed it.
So that's in 1 year on a $700,000 house, $35,000. Now, the difference between 7% and 6.5% or even 6% does not eclipse $35,000. Okay. Right. So while I totally get it, it would be great to have a 6% interest rate. The average time in loans, what is the average somebody holds a loan for?
Well, we used to use seven years as like the key metric. We're now seeing that stretch to about 10 years, which is interesting.
In loans, really?
In loans.
Oh, I was thinking it was probably half, because I believe that the average year somebody holds a house is like 7 to 10 years. So I would say average loan, my guess is 3 to 5. That's my guess.
Yeah. And that really is going to come true when rates come down, because all the people that refinanced in 2020, they're going to stay there. But anybody that's bought since then will refinance again. And so, yeah, that should come down. So, yeah, check my stat on that.
Okay. Well, we should probably have a guy that's our fact checker, like Joe Rogan has, who just checks the stuff and then puts it up on the web for us. Exactly. We should have a guy. We haven't arrived yet. We're only at episode 133. So once we get to in the 700s, we might land like that. So then So the idea is you guys may originate a loan, right? If somebody originates with you and maybe it's a year or two down the road, do you guys have a program for like a low cost refinance or something like that? Do you guys have anything like that?
Absolutely. Yeah. And we do. We at Guild Mortgage, we're offering a no lender fee refinance, or no matter where you go, most lenders are offering that. And I think that's really important, Dan, because a sure sign of predatory lending is me to say, hey, Dan, buy now, refinance again down the road, and let's refinance over and over again. That process is called churning, and that's a sign of predatory lending. That typically doesn't benefit the borrower. They're backing themselves up long term, they're extending their loan duration and so forth. And so to really kind of battle that, we're saying, hey, we are suggesting buy now and refinance later. And to help you through that process, we're not going to charge you our fees again. The other really important thing to think about when buying a home today and taking out a purchase loan and then refinancing is who services that loan, because the servicing entity has a lot to do with the refinancing. Specifically with Guild Mortgage, we service that loan. We collect taxes and insurance as part of their escrow balance. We don't recollect that at time of refinance, which saves $3,000 to $5,000 right there alone, because we're not having you bring in 6 months of taxes and a couple of months of homeowners insurance again. And so because we service that account, we hold on to it. We're just saying, hey, keep us on track. So bring in 1 month, so like one payment. We'll lower your rate, business as usual, no lender fees, and let's continue business as usual.
Yeah, that's good. That's really good. Okay, so now lastly, your point, you had something about what Freddie Mac has to say?
Yeah, so Freddie Mac is on a nationwide roadshow with Clayton Homes, an up-and-coming, or not really up-and-coming, but they've been around for a while, but they're really leading the space of modular homes, which is kind of what's replacing manufactured homes. These are well-built factory homes that can be placed on a foundation. And we as a lender get to look at them as a single family stick built home. So that's why we love it, because we don't have to go through our normal hoops that we have to go through on manufactured homes. So they're out there doing their roadshow. And the one thing that Freddie Mac continues to share with everybody is that affordability across the country is a real issue. And that if people are waiting for rates to go down, they will eventually go down. But in turn, that means prices are going to go up, and it may also still be unaffordable to them. So what they're suggesting is buy now and really get in, because if you don't, you miss out on the compound and appreciation factor, and you miss out on several years of appreciation and building wealth by waiting for the perfect interest rate.
Yeah, I know it sounds kind of like a broken record, and the reality is that the American dream, the dream of home ownership, it has a solid impact on the community, and so a lot of people their heads down. There's low unemployment, and the interesting thing, I think about the low unemployment and stuff like that is that we pumped a bunch of money into the infrastructure and into jobs and the economy during COVID, and that's still in the system. That's why we have low unemployment. One of the best things you can do with that, with the fact that you have, gainful employment, is figure out something that works. Maybe it's not the perfect house. Maybe your salary is going to increase, 5 years down the road. What a great way to protect your earnings by putting them into a forced saving plan, which is a house. And I think that I don't know. I believe in it. I've done it. I work here, so for me, it's easy to say. But at the same time, there's definitely indicators that show the best way to build lasting wealth is to invest in real estate.
Exactly, and it's a stepping stone. Just buy something now, get into it. We can convert it to a rental to start your rental portfolio, or you can trade up the equity and buy something bigger. Very few people buy their dream home or that forever home in step one. So use the starter home to get to that move up home.
All right. So that concludes our Mortgage Moments segment. I'm not going to do a commercial, but I want to know what you're up to this weekend. What's a fun thing? Are you going to go skiing this weekend? No?
I should get up to the mountain this weekend. There's no home game for the Sounders, and so I should get up to the mountain this weekend.
Should get up to the mountains. Lots of new snow this weekend. This is probably the best snow you're going to get.
Yep.
This is about it. All right, cool. I want to put out there that if you are watching this, we appreciate you watching it. Feel free to subscribe, our podcast comes out right after this. So we're getting some good downloads on that. But also too, the Tulip Festival is coming up put that on your calendar. I think it starts in April, but oftentimes I miss it. And the Tulip Festival's up in the Skagit Valley. It's about, I don't know, 20 minutes north of Seattle. Oh, no, it's not. It's about an hour north of Seattle. You can stay in a town I like to call Hallmark Town, which is La Conner. It's like basically the little sleepy town in the Hallmark movies that some people watch. I don't watch. I just have watched enough of them to know that La Conner is Hallmark Town. So you can go up there, stay overnight. There's a brewery up there. There's lots of great food, and then you can go tiptoeing through the tulips. You never know. But we should do live broadcast from that. That'd be kind of fun.
There we go. Maybe update our profile pictures with tulips.
With tulips. Very good. All right. Well, thanks for joining us on our episode. We appreciate it. And feel free to join us next week. We're going to have a guest on. I think she's talking about nutrition. I'm going to be talking about important factors for sellers in getting their. No, I'm not. I'm actually going to talk about buyers and what buyer wants. I changed my mind. All right. Thanks for watching the show. Have a wonderful day.